G'day there. Welcome to the week ahead on 20th of September. We're having a pretty big sell-off today in the ASX 200. Feels like a bit of a correction is upon us. So I'll probably focus on the equities a bit today and maybe gold. Now our market has broken back below last month's low, and that happened only this morning. And the selling is accelerating on this Monday morning. So if this month, and this is a monthly chart of the, it's the SPY, the futures on the ASX 200. So, you could say this is pretty much the ASX 200. It's setting up as a potential monthly sell pivot this month. And we've still got 10 days to go. So, if we have a really bad week, who knows what this monthly sell pivot is going to look like. It could be bad. I have been talking about how these false breaks occur all over the place. I'm always wary when we've had a market that's just marching higher relentlessly and, breaking out to new all-time highs. There's your pre-COVID crash high. It's just when that momentum wanes, and if we get a reversal, that false break can often lead to some sharp selling and often a mean reversion move. And the 20-month simple moving average would be a fairly obvious target on a correction. So, that's quite a long way away from where we are now. I'm not going to necessarily call the market there right now today. We still have to wait until the end of this month, make sure that the monthly sell pivot is in place. But I just think it's time to be a bit wary of this market. I mean, we're down 160 points at 1 o'clock in the afternoon. I think I'm not sure where we're going to close, but I'd say it's going to be weak on the day today. And things just, starting to set themselves up. That we may be looking at a false break of that all-time high. So I'm a bit wary. I've been taking a bit of money off the table today, and really I'm thinking this is going to end up being a pretty bad day. If we move on to the S&P 500, first thing to note is that we did get a weekly sell pivot a couple of weeks ago, and we've had a continuation on from that. So we've got the first signs of things rolling over. On this Monday morning, it's breaking down through that 10-week exponential moving average. We know this is such a strong trend, and maybe it just falls to that 20-week simple moving average and then the buying steps back in. But I'm just a bit wary that this is going to see a bit more of a correction than people expect. We've got this Evergrande situation, the Chinese property group I'm sure you're reading about. They've got a bond payment due on Thursday, I think about $83 million US. If they miss that, that is pretty big news. There's always that fear of contagion in the market over there. And really that problem could explode and go a bit nuclear if they really do fall over. So I'm very wary of that for starters. And we've got the FOMC coming on Wednesday, hints of tapering. You'd think if this Evergrande situation is going to explode, perhaps the Fed is going to back off and try to get the market bouncing on good news from the Fed. But who knows what they're going to come out with on the Wednesday. So I just think this week is a bit of a sketchy old week. Things are shaping up now that it's broken through that 10-week exponential and we've got the weekly sell pivot. It's just starting to look like a bit of a downtrend that is developing, but it is still early days. We've got to accept that this momentum to the upside is massive. And even if we have a sharp sell-off, it doesn't mean it's not going to then trade back to the highs again. So, it's very early days to be saying run away. but it's not a bad time to be considering the portfolio and maybe taking a few profits and just lowering exposure a bit if you're massively leveraged. You'll see that the low of the month from last month in that S&P is down at 43.47. We're still about 40-50 points away from that. Look, it could be below there tonight if it has a bad night. And one of the issues I focus on is the fact that the triple or quad witching hour happened on Friday, and often volatility will die leading into that. And I often see them sort of spike the market into the actual expiry, and so often heat can come out of the market after the expiry. But also, I've seen quite a few large reversals near that quad triple witching time, and I think that's related to the rolling off of hedges, possibly. The rolling off of the gamma was keeping the volatility low, and once that's out of the way, the market can move freely again. And if we see a reversal, it can be pretty short and sharp and get out of hand quite quickly. I've seen a few big sharp moves, and we are in September. So I'm a bit bared up today, thinking that this is looking a bit like it's going to continue. But again, you look at that strength of this move, we're still well above the 10-month exponential moving average, aren't we? And that's almost going vertical. So even just a correction to that, if the market's strong, it'll probably bounce off that. But that's not a bad target on a correction, a quick sharp correction within this strong uptrend, and that's down at 41.25. I mean, that's 250 points away from where we are. That's a 5% move or more. It's nothing drastic. Again, it's not time to panic by any stretch, but I just think this selling is going to continue this week, and as we enter September, which is traditionally quite a weak month. One thing I'm noticing this morning is the Seng, which is looking a little bit dodgy. It's sold off pretty hard. This is a weekly chart. It's just really rolling over, but it is down nearly 4% this morning. So it's not looking good. And if I do just a long-term analysis of that Seng, I don't often look at it, but this is a very long-term chart. And I just notice, first of all, the false break of that high from '08. So we have had selling pressure over this last few years and haven't taken out that all-time high since we have actually had that double top. And if I'm just looking at the structure of the little uptrend we've got going on here, you can see quite clearly this has been moving higher and higher with higher highs, higher lows. We've seen the buying coming in where we'd expect it. If we're looking at that buy zone, it probably came in a bit higher than the buy zone there, but that would be in the buy zone, and that would be in the buy zone. So we are seeing good buying pressure, but also we're now seeing the selling pressure come in. So if I just look at that most recent wave to the upside, we analyse the price action. What can we see? Well, lots of work around that point of control. We've got the selling pressure from the sell zone. We've got the buying pressure from the buy zone. And again, selling pressure from the sell zone. And we're cracking and rolling over again. So from here, we are targeting back down to that 20,000 to 22,000 in the Seng. And if that doesn't hold and it rolls over, boy, it's going to look pretty tragic pretty quickly, like really bad, because of that long-term picture where we've had the double top in place. It's already happened, and we're starting to see a bit of a downtrend develop, even though it's had a nice rally there. But if this breaks those lows, all of a sudden it's looking like this rally is over and we're going to see a much bigger sell-off. So I don't like the look of that Hang Seng at all, looking at that this morning. And we've looked at this Aussie dollar before. It's been a tricky one because it is trending up. This is the monthly chart, and so you've got support around that 20-month simple moving average. But it has rolled over in relation to that long-term downtrend, and I've shown you all this before. If you've been watching these, we've got a decade-long downtrend in place, and I'm always looking at the waves that we've got there, checking out the buy and sell zones where I think there's a higher probability that prices can roll over and head back to that point of control. So that's all sort of taking shape, and we've got the monthly sell pivot in place a few months ago. I was getting bearish around then and told you about that, but then I thought, it could bounce off this support level around the 20-month, but with what's going on in iron ore and other commodities and what could happen in Evergrande, killing off the construction industry over there in China for a bit, there could be bigger repercussions, especially for that Aussie dollar. And it's been holding up pretty well in the face of the complete collapse in iron ore. And if we do get a bit of an equity risk-off event, the Aussie dollar will probably cop it a bit. So if we break down below those lows from last month, it could see a bit of a move in that Aussie dollar. And that would line up with, a bit of a risk-off event across equities. So, a target down towards that 68 cents in the Aussie dollar. And we were looking at gold last week, and was just saying I was getting a bit nervous about what was going on there in gold last week. I pulled back from being bullish. I thought it could blast off if it took off to the upside through there, but failed to carry on. We've still got the correction, which is live from the last year, and that really isn't under threat. And I'm just worried what happens if we break below that low and see an extension of this current correction. So we're not there yet, but it's just looking as if a few bad nights, and that may happen. So I've actually lowered exposure to gold myself just for now. I need to see it really heading back above 1850 for me to get bulled up again on gold, and I'm just wary what happens below that sort of 1680 level in gold from here, because that just brings into play the buy zone of this most recent wave to the upside. So we've got a lot of selling pressure come in around that sell zone, and it's holding near the point of control at the moment, so it's a bit undecided. It really does need to break below that low for me to really say, wow, watch out, because I think it could have a pretty sharp fall just down into that 1550 to 1600 zone. And look, if the buying pressure's there, it could reverse there and be a fabulous buying opportunity. That's a story for another day. But for now, just a bit wary of gold. So that's enough for today. Bit of a bad old day in equities. We'll see if it can recover over the week. But if it doesn't and the selling continues, it starts to look just a little dangerous to me. So all eyes on the FOMC, all eyes on Evergrande on Thursday. Does it cause an acceleration to the downside and set off these false breaks of the past all-time highs? All right, I'll come back with more next week. Cheers.